Okay, recording this video, it is Friday 14th of February 2014, Valentine's Day. So if you're celebrating Valentine's Day, I hope you're having a good time. I want to do a couple of videos this weekend. I want to talk about what's going on with the equity indices on the E-mini, but also want to talk about silver. Yesterday I put out a video on gold and silver and saying they were breaking into an uptrend. And today on silver we had just a beautiful move, 5% up on the silver contract in one day. So beautiful little breakout of congestion. And I wanted to run through this kind of setup on the daily and the weekly chart in just a little bit of detail because it's almost a picture perfect setup. It's got so many components of the better indicators kind of going off at the same time. I can explain how this market bottomed and why it's starting to rally and why the rally is going to continue a bit. So for the old hands, you know, familiar users of the better indicators or subscribers to Emini-Watch, this might be a little kind of, you know, too simplified. You might be kind of beyond this, but if you're new to the website, new subscriber interested in the indicators, this will be a good way of kind of building up the indicators so that you can see how three non-correlated indicators can come together and signal changes in trend and entry opportunities. So first of all, here's the daily chart of the silver contract, futures contracts, continuous contract. That's what the @ symbol is on TradeStation. That just means all the futures contracts have been concatenated or joined together, so you got a nice bit of history. So we had this thing bottoming at the end of last year and saying, you know, this thing is building a base, waiting to break out. Today's the breakout. But how do we know, you know, when it's building a base and when it's going to break out? The first indicator I'm going to put on in the chart is better momentum. And this comes in two forms, one plotted beneath the price bars and one with these important signals transposed onto the price bars themselves. So the first thing to note is this thing kind of fell off after an exhaustion buy pattern and bearish divergence signal into this downtrend down to 19 bucks, and it started to bottom down here. The first of the signals that's important is exhaustion selling. So that's exhaustion selling there going on better momentum, signaled when there's professional activity as well with a blue dot on the price bars. And for a market to bottom and reverse and go the other way, all the sellers need to have sold. Same thing as the top. All the buyers need to have bought. Once all the sellers have sold, there's no more, you know, sellers to sell, and so the market can reverse and go the other way, and then the sellers are trapped. They have to, you know, follow along, dump their positions, whatever it might be. But all the sellers need to have sold, and this exhaustion sell signal just shows us that there's an extreme amount of selling going on at this point. People have lost it, but beneath this kind of support level up here at 21, we're breaking into the 20s. We're starting to, you know, have 19 in our sights, and they're scared. So exhaustion selling kind of goes on. Then from market to base, what we need to see is less selling as the market progresses. So we got to 20 bucks here, but we start to move down to 19 all of a sudden kind of down here, and all of a sudden you see the first bullish divergence pattern. The first one for me is a really important one because that is the first signal to say, look, the selling is declining. So the number of sellers is less and less, and that starts just like acceleration. You know, when you're turning a corner, you take your foot off the gas, you start to slow down as you're going through a corner, and then if you're, you know, moving through the corner and accelerating out of the corner, you start to see, you know, acceleration on the other side. This is just showing a deceleration of the selling going on here, and that's what we need for a bottoming pattern to take place. Just a small note on the better indicators. There's a slight mismatch as to when this is printed. The signal when it actually goes off is printed directly on the price bar. But because this takes a bar or two of confirmation, what I do is I back plot it on this plot so you can see exactly what little peak or valley in better indicator triggered that symbol. So if you see these and they look a little bit out in terms of being a bar or maybe 2 bars different, that is the reason why. This is better momentum's waiting for confirmation. It'll print as soon as we get that signal on the price bars, and then just back plot this on that little peak or valley that triggered that particular signal. With better momentum, that's no big deal. That kind of 1 or 2 bar kind of confirmation is actually a good thing because it kind of makes you wait. We don't just jump off these kind of reversal, these types of first bullish or first bearish divergence signals. All they're doing is showing that lack of a deceleration in that move kind of going on, and then we take a while in order to get confirmation going the other way. You can see we're just basing in this channel for a good few months. You know, it's taken us several months, almost 5 or 6 months to just test this range here, and then we get a beautiful little pattern at the end here called a flush pattern here, signaled in yellow beneath the price bars and down here. A flush signal is flushing out the last of the sellers, and you can see the amount of selling that was happening into those lows was pretty high. It wasn't as much as the exhaustion selling that we saw kind of bottoming this move, but it's it's flushing out the last of those sellers, and you see exactly the same thing on the upside, flushing out buyers. It's an important kind of, as the market starts to turn down here through 19, all of a sudden there's a lot of people thinking, oh my, it's going to break through 19, it's going to break to new lows, into a downtrend, I need to kind of jump on board. And that's exactly what these people are doing. They get wrong-footed and we go the other way. It's flushing out those sellers. So that's buying and selling volume, and how better momentum signals these accelerations and decelerations in buying and selling volume. The next thing to put on is better sine wave. Better sine wave here is showing cyclical highs and lows, and then when we break into downtrends and uptrends, breaking through these cyclical support and resistance levels into a trend move. What we had here was we'd broken, with this exhaustion selling, we'd broken through support into a downtrend here. We made a pullback into that downtrend and then a final move down. Normally that would signal with an end of trend signal because it's a cyclical support after a pullback and a downtrend, but the pullback level was violated on the upside, so I call this a dirty end of trend. Maybe I should put like an end signal in brackets as kind of a confirmation, but that's what it is. It's an end of trend. That's better sine wave, just using the price information alone to calculate the cyclical activity happening. A lot of the time the market's moving through wide cycles like this, support to resistance to support to resistance, but then when it breaks into trend moves, we don't have any cyclical activity until the final little flip in this pullback to end of trend. A little bit of cyclical activity starts to take place, and that's when we can say the downtrend is over, because we've seen exhaustion selling, first bullish divergence, pullback, dirty end of trend with a flush pattern. It's a beautiful little pattern that signals the end of this move. Then what we've had in the last couple of days is a little break to the upside, and then with today's activity a nice solid break through resistance into an uptrend. So breaking support and resistance takes us into trend moves, and when you get everything kind of lining up behind this to support that break, bang, it's a good break. So everybody likes to be a breakout trader, but how do you get high probability breakouts? It's by making sure that all the good stuff has happened in the background for you to judge the direction of the breakout, and it's going to be a good breakout, not a false breakout. The last indicator to put on here is better Proam. Better Proam is painting professional and amateur bars. Professional bars are painted in blue, amateur bars are painted in red. What I want to show you here is two little patterns in the last week showing what the professionals were up to. So we'd started to rally back from this 19 level after flushing out all of these sellers, and then we see these two little blue professional bars underneath this resistance. Cyclical resistance there plotted with these white bars, white dots, I beg your pardon, just here above the top of that cycle at just under 20.5. Two blue professional bars. That's what I call a gathering pattern. That's the professionals gathering underneath a cyclical resistance or a support level, waiting, amassing their forces, kind of accumulating all of the sellers that might be selling into that kind of cyclical resistance there. Anybody that's selling, they're buying up all of those contracts, just waiting and waiting. It's nice when it's a nice little small congestion zone there, kind of fairly low range bars, but the professionals are active there. The average trade size is high. Just waiting underneath that resistance level, bang, for this pop to the upside. So that's a gathering pattern, and then when we have a break like this through a resistance line, blue professional bar, love it when they're nice, long, strong blue professional bars like this. If they're coming from underneath resistance and breaking through resistance into this uptrend, or they've just been hanging here yesterday above resistance, and then we have this, bang, that's called jumping the creek. That's one of Wyckoff's kind of terminology, jumping the creek or falling through the ice. If you're falling into a downtrend, you fall through the ice. If you are jumping into an uptrend, it's jumping the creek, and this is what we had today. The creek effectively is this congestion zone here that sat from kind of 19 up to 20.5. This is the creek that we're talking about jumping, and we're kind of getting going. Now, the thing about a day like today, 5% up move day, big range, all professional activity, just taking this thing forward, getting it going as far as possible. Because what's happened is they've trapped people. All the people that are short now are like, my God, what do I do? This thing has moved well against me. Either their stops got hit because they were putting their stops above this kind of congestion zone, and that just added fuel. So as soon as those stops get hit, they're forced to buy. It projects the market even further above this. But the further the professionals can move this activity above that congestion zone, the more people are really worried and are really in trouble, and it forces them to do something, take activity, either sell their positions, jump on board, or whatever it might be. The further they move away from there, the less likelihood it's going to fall back into the channel, and kind of they'll have to build a base again, build another kind of gathering pattern, get this thing going. This is a really nice strong move. It's not going to be looking back very far. We're going to get continuation from this. You know, the little retraces we have are going to be very small and very weak, I'd suggest, and so this is something that, you know, people will be forced to, once they start to really get this thing going, everybody that's short is like, you know, this is total surprise, I've got to really, you know, think about my positions and do something about it. So it starts to really kind of gather pace. But as I said, it was a picture perfect kind of move with the better indicators, and they're three non-correlated indicators measuring totally different things. We're measuring the buying and selling volume, we're measuring the price and cyclical activity and price, and we're measuring the average trade size. So those three non-correlated indicators are coming together to signal this change in trend. You need the exhaustion down here in the first bullish divergence to get all the sellers out. All the sellers need to have sold. That thing needs to happen. And then we're going to go through a congestion zone and pull back to dirty end of trend, or pull back to an end of trend as a perfect little entry point once we got this in the background. Comes with a flush pattern, which is a beauty, and then we had a couple of little gathering pattern underneath that cyclical resistance at the top of the channel, and then bang, we jumped the creek today. Now, the nice thing about this silver trade is it's also happening at the same time as the weekly chart is almost making an identical pattern. So the other side of the better indicators is if you line these things up in multiple time frames side by side. So if you're swing trading or long-term kind of position trading, a day chart next to a weekly chart is ideal. So we've got the daily chart next to the weekly chart, and look at the weekly chart. It's such a similar pattern. Exhaustion selling on a left shoulder coming down, first bullish divergence comes in. We then go to make our pullback to end of trend using price and a flush pattern kind of down here. We have another little better indicator called the Rambo pattern. Rambo stands for a potential reversal of an amateur breakout. That's amateurs selling at this extreme. They get wrong-footed, and we start to move the other side, and all of a sudden they're in trouble. They've got to cover. And then with this week's activity, blue professional up bar, getting us out of this congestion zone, getting this move going. So it's end of trend syncing up with end of trend. You know, you don't always get the picture perfect like that, but when they kind of happen together like this, it's a nice thing. So we've got almost exactly the same thing going on the weekly chart. So we've got more confirmation that this is going to be a solid, good break, a successful breakout to the upside that's going to travel. Now, how far is it going to travel? Let's wait and see. But the kind of things I'd be looking for, first of all, a pullback to end of trend uptrend move on the daily chart is an area where people will be starting to take profits. If we start to see exhaustion buying as this thing accelerates on the upside, that will show some temporary running out of buyers on the upside, or people kind of short covering or reversing, whatever they might be. So if we get an exhaustion buying signal on the weekly chart kind of up here, that would be another area where people, it's a good place to take profits, and the move will start to kind of back off a little bit. But for the time being, this is all very good, and because this is such a large ranging bar today, you know, people are in trouble. They're kind of caught short. This thing has taken a lot of people by surprise, and so they'll have to figure out what to do. The other side of things when you're also trading commodity futures like this is you can check the commitment of traders numbers as well, in order to get a sense of whether there's professional support to a move like this. So one of the things I like doing is looking at the weekly and the monthly chart with commitment of traders underneath that. Commitment of traders, this is just showing the professional activity, and I reverse the indicator, flip it upside down, just because it makes more sense with moves in the market. You can see here, this commitment of traders number is following the price bar here, and what I'm interested in is first of all divergence patterns. If we had some nice divergence patterns, you know, supporting this move, or at least that the professionals are starting to move in the same direction as the market. So we've got the professional commitment of traders going positive here as the market's kind of moving up on this weekly chart. Remember, commitment of traders data is only weekly, it's only released once a week, so all we can do is plot a weekly and a monthly chart here, but it's trending in the right direction. It's not kind of going against us. So at least we've got kind of professional support there. And the other thing, it's above zero, and it has been for a long time. This has been the pattern for gold, silver, crude oil, and so on. And so it just suggests that fundamentally there is, you know, professional support for rallies in these markets rather than the other way around. So there we go, almost a picture perfect kind of trade setup with the better indicators on the daily chart, mirrored on the weekly chart, with support from the commitment of traders numbers, professional support, kind of saying that that's going to be good. I'll be interested to see where this goes. A lot of people have been waiting a long time for silver to roll over. Remember, this was the topping out pattern that we had up into the 50s with all these exhaustion patterns and so on. And now on the downside, we've finally done enough basing down at, you know, 19 bucks to stop this thing for the time being and have a little bit of a rally and go the other side of this. So let's see how this travels. Anyway, so if you're not familiar with the better indicators or kind of new to them or whatever, I hope that kind of just little kind of build up was helpful to you.